Hi, I'm Shane Williams, and I'm the President and CEO of West Red Lake Gold Mines. West Red Lake is a development project based in Ontario. We acquired the Madsen mill recently, and it's a restart as we move forward, de-risking the project and moving the project back into production.
Good to see you here.
Great to be here. Great to be here.
Lovely, enjoying the sunshine. And I'm also enjoying the amount of people here talking business, because it's a lot of investors. We're seeing good news. How are they enjoying a restart story?
Yeah, I mean, we're lucky really in that there was a lot of projects that came on in the last number of years. You have Artemis, you have the G mining, you've had Equinox. There's not much more. I mean, you had a big rush of them, and we're there's nobody else out there that is next for us. You had Windfall, you have everything. So we're kind of unique in that sense. People like that story. Gold is now going. You know, people care about gold a little bit is more.
You were at 2,500, yeah.
Put at 2,500, you would think. So that's all been positive. I think as we go with group people, they're getting the de-risking we're doing. They appreciate the work we're doing. They appreciate a lot that we're taking our time. Look, go back now. If we had got this asset today, I'm not sure people would have said, hey, get back in production, gold is 2,100. But we would have stood back. I think they like the approach that you've stood back, looked at, understood the challenges, what went wrong, and kind of addressed those, and that steady as she goes process.
Right. Do you find the timing that you kind of picked up Madsen? That obviously, when we've talked ad nauseum, and as have you, bad, the fact you picked it up cheap, and all, and that's all well and good. But in a $2,500 gold environment, do some of the conversations around, well, let's get into production early, let's take advantage of this, we don't know how long it will last, or you're very much, I'm not to be rushed, we're going to do this the right way type of mentality, but is that what's the sort of psychology around the expectation around timing for you?
Yeah, look, I mean, Frank is our major shareholder. Frank gets timing always
Frank
right.
Frank Juster
is our major shareholder. Frank was part of the structure to conceive this.
Yeah.
Frank always gets timing very right. Back in 2011, he built a lot of good companies before the gold run before.
Yeah.
So that was the concept. Get the project. I'm not sure at the time, it was a restart. So yeah, we get back in production easily. But we went in and understood it. In fairness, Frank has been very patient. We went back in and said, no, we need to do this right. We need to go A, B, C, D. Mm. Now it's going to take longer. Look, down the road, if gold goes to 3,000, we look like geniuses.
You will.
we could always say, we knew that. We knew that, we kept it. But look, these projects need the work. They need a work, they need a level of work you need to do the hard yards to get it there. And when you start, you can't have a position where you rush in, you tell them, particularly with the history of this asset, everyone's going to be watching us.
Yes.
Everyone's going to watch. When we say we're turning back on, we need to be sure we get there, because everyone's going to go watch and see.
Yeah.
But I think if we do that, given some of the challenges of in the industry at the moment, we get a lot of kudos when we can deliver that, because that'll be a very successful story. But so it's going to take time now. But I think once we do that, people will give us the kudos for what we've done.
Right, so you've had your feet under the table for a wee while now, right? Okay, and there'll be things that you're looking at and going, right, I need to understand what the heck we've got.
Yeah.
We've done the what went wrong bit, but now I've got to get to that optimization bit to say, right, okay, I think I've got the data that I need, or not, wherever you are, and say, right, now I can piece it together in the right order or play. Because I think what some companies do, or certain conversations are, they say it's kind of like they know all the words but not necessarily in the right order, and it's the same for you. It's everything's got to follow a sequential approach, right?
Yeah. So look,
where are we?
I've been doing this for 20 years, building operating mines. There's a step-by-step approach that you need to do.
Right.
And it doesn't matter what project it is, it doesn't matter how big or small, you got to do those steps. So if I say up to now, early stage, we did the drilling. So we got to understand the ore body. We got to understand what the challenges were, the lack of definition drilling, why there were challenges. So we've kind of ticked that box now. We've done it.
You've done the pin cushion.
We've done about the pin cushion. We've done 50,000 meters of 6 meter spacing.
Okay.
Right?
Wow.
We have now probably, the resources there. We've done a lot of work on that drilling. By the end of the year, we'll have done like 70, 80,000 meters of, and I'm talking 6 to 8 meters drilling. With 2 drills on the ground. The level of drilling we're doing at is not resource. It's mine design drilling. It's ready to be mine design.
Explain that. So
So normally when you do a resource high level, you step out from mining. You
Yeah.
do big wide spacing drilling. You define a high level of what you got, and then you step back in, you do another level. You go from, measured or from inferred to indicated. Then you go down another level, and you keep going down and down the spacings. Now, a deposit like Madsen needs a little bit more because it's high grade but very complex geology. So you got to get down. When you get that, then you hand it to the engineers. When you have those shapes done, you hand it to the engineers, and the engineers run. It's called MSOs, but there's mine shapes around them to develop the mine. That needs very fine drilling. In a sense, they know what you've here, but you got to get those blocks designed.
And so but give me more, because I think this is fascinating, because most people go in and make investments and stuff like this without actually understanding the complexity of how the mine planning works. So give me some more on those blocks.
Yeah, I can give you that. So in order to do, it's kind of a stage. In order to do that mine planning, you can't do the mine planning without the geology. So you got to get the geology right. You got to know the ore body. You got to know where it is, how it moves, where it is, structures, everything. Then you hand that over to the engineers, and the engineers run economic. Then it's the money that comes into it, the economics. You have a resource, but can you mine it? Can you mine it? Can you make money on it? So, because geologists will talk about, we have an ore body, it's here, it's great. Everyone talks about that, but it's actually, when you put economics around it, does it hold together? Is it continuous enough? Can you create ore blocks? Can you mine it? Development. So that's the process that needs to go through. And that's a process. That's the next stage after that. So the geology in our focus is done. It's now gone to the engineers. They're wrapping their economic models around it. And then you come up with, you have this, now it's this.
Yeah.
It's defined, it's very definite. We know we have that,
It's kind of, we're talking about the economics. We're talking about the stuff that affects something that's quite important in business people never talk about in mining, is the ability to have a margin, make some money, not revenue, not turnover, make some money here. And for you, what does that mean in terms of the optimization of the order play for that mining then?
Yeah. So what we're trying to do really is have, in these underground mines, the challenge with them, in big open pits, you can just drill them to death. You just move earth. In the underground mines that are deep, you can't drill that level of spacing until you develop down. So you kind of develop down underground, you drill underground. You can't drill from surface. So you can only get so far ahead of yourself. You drill, you go down, you drill, you go down. So these mines, underground mines, never have like 10 years of reserves ahead of themselves.
Yeah.
They always have 2 or 3. Musselwhite or other big mines in Canada, they've had 3 years reserves for 30 years. You know what I mean? They never, they don't define it. It's important to understand that when these mines come out with, they have 2 years of reserve. Westdome is the example.
Yeah.
Other mines, they have 2 years of reserve, but they've had 2 years of reserves in the book for the last 30 years. So they know they go, but they're not going to spend the money to drill right down. They're going to develop down, do tight space drilling. So that's the concept you need to work at. So once that's done, you put the mine shapes around and you go, can we mine this for a profit? That's more the thing. And you got to get a year to a year and a half of inventory, which I call mineable shapes, these shapes in front of you that make money. And then while you're mining that, the drills are working ahead for the next 2 years. So it's kind of a step. While you're mining, they're drilling ahead in the next 2 years ahead of you. And you're kind of always moving in cycles like that. That cycle is very, very important in underground mines, because if you don't do the drilling, you run out of the ore to mine. So it all has to come together. And I think this is great that we're doing this, because not a lot of investors understand that sequence, because they look at a project and go, yeah, it looks great.
These are generic things. Oh, has it got 10 years mining life? Has it got X reserves? This is a very unique situation and a very delicate one, as you rightly say, because it went wrong. You don't get a second chance here, I don't think.
No.
Well, someone else might, but you
Third chance.
Third chance, but not you, right?
Yeah.
And so I guess where I'm sort of working to is if you can help me understand how you plan the economics of something like this. People get the high grade, right? And super high grade stuff, but that kind of sequencing around those blocks is fantastic. But moving forward into a genuine revenue generation, that's the bit people are eager. Right. Yeah. But again, you're not to be rushed. So can you explain the process thereafter for when you press the big green button?
Yeah, so there's a couple of key triggers that I need, and I know the board need. I mean, we have a very technical board, as you know, and they're miners. They're, you can't pull the wool under their eyes. They've done this before.
Yeah.
There's a couple of key steps that we need to do. So we need to have this mineral in this mining shapes in front of us, like I was talking about. We need to have at least 1.5 years done.
Yep.
You need that in place, right, ready to go. Then you need to have. We're going to do this test mining program. So you take a small sample of that, you mine it, you bring it to surface. We're going to do some test trials on that, some sampling, run it through the mill.
Yeah.
And so what you get out of that is our resource model, our economics said we should have 2,000 ounces in that block. Yes. We'll run it through a mill, and the mill will say you have 2,200 or 2,000 or 1,000, whatever it may be. Yeah. But then you'll be able to convince the market that we've got the ore body right.
Okay.
I think that's the key to do that step. So the mine shapes, the inventory, the test mining. We're doing a pre-feasibility study at the moment as well. That will come out with the economics. And once all those are done and those sequences are done, then we will go back into a potential restart. So there's quite a few. I mean, we've seemed to take a long time to do those, and there's still a lot more steps to do, but that needs to be done.
But I guess there's a few things to remember here. Is like, and I referenced at the beginning, you pick this thing up cheap, right? So in you're not having to very quickly backfill any expenditure, etc. So the cost of capital,
it's debt free, so there's not a rush.
All that kind of good stuff. So therefore, time is on your side in that sense, right? But kind of going when you going forward into the kind of revenue phase, those demonstrating those margins is going to be important. This, and will the PFS give us an indication of what?
The PFS will give an economic model. It will take everything I talked about, the reserve, the mining cost, how we can mine it, the mill processing, the cost of milling, all that together.
Yeah.
A certain revenue assumptions, certain gold price assumptions, the costs we have. We're very lucky in that sense is because we're like an operation today. We have 100 people on site. We're underground developing, we're mining, we're kind of practically mining. So all those, when you get a feasibility study, as you know, somebody thumbsucks numbers out there and puts them in together in a number, and it shows, well, we actually have mining costs with power, running power, diesel, fuel. So they will all go in. So it'll be very realistic, the cost basis of that. Out of that, we'll spit a cash flow model, NPV, IR, what this project looks like.
Right. It's a pretty robust PFS.
It's
quite frankly.
It's actually more robust because a lot of people do a PFS and then they do an FS, and they don't even use real numbers at that stage.
That's what I'm getting at.
A lot of consultants do benchmarking and go, this is your number, this is your number, this is your number, and then after that they start to mine and get actual costs. The reason we're doing a pre-feasibility is there was no really study in place. We're doing a pre-feasibility, and because it has so much data and so much actuals, most of the capital is already spent. That's why we're using a pre-feasibility to relaunch. Because people said to me, why don't you do a feasibility study after this? But feasibilities are more like finalizing capital costs, finalizing OPEX costs. And I have all those. And I've got all my, I have a mill, I have all my tailings. So I don't need to spend months getting those costs. I know how much they cost. Because I'm buying trucks, equipment, a new camp, a crusher. So they're all sunk costs.
That's why I was asking you, because I imagine doing the PFS really, I imagined, for the technical data feeding into it, I wasn't imagining you feeding a lot of new cost data at that point. But you've already got it. So from that point, as an investor, I'm convinced like I should really look at it. You may not be able to say this, but I'm looking at this more as like a feasibility level study.
Yeah,
so
and potentially it's part of a restart plan. You need, like, the feasibilities are usually high level, but a subset of that will be a restart plan, an actual restart plan. Because I have, like I told you, we're underground developing today, so I know the cost of underground development, not cost per meter from this study and this study, and we put it into the study. I actually know how much it costs. I have manpower. We have 100 people on site, miners, mill guys, we have maintenance. So we have all those actual costs. So when you get this PFS out, it's based on actual data, real data.
So I've got a huge degree of confidence speaking to you today and previously, but today especially, about the process today, the process forward. But I'm still going to come back to what everyone is asking you about, which is, what are we building here? It's a restart of, is the end game the same as, pure gold we're aiming for in terms of production level, or are you taking a more cautious approach to the output.
Yeah, so I'll become known as Mr. Cautious, unfortunately, because we're taking a different approach. Pure Gold's approach was to they had visions of this 100,000 ounce. I don't know if your viewers remember, they were starting and growing, and they were 100,000, 120,000 ounce producer. And that's not the model I'm taking. I'm going to take a model where we start small and build up from there. You know, because I don't want to, after doing all this work and all this credibility, the last part is to deliver. You know, I can tell you about all the stuff we're doing and it's all great, but if we don't deliver, and I'd rather come out with a smaller study, not with the same high level economics, with a shorter mine life, because I know the ore is there. I know over time, a very compact study that we know we can do, rather than, you know, some studies come out with a big view, a grand view, $1 billion market cap. Well, we're not going to do that. I'm going to be very.
I think that would be a front and center message for me, because again, setting expectations, managing expectations in the market. People may have, long memories of the last lot we're trying to do, and they think, oh, they're going to replicate this. So it's a ramp up process. You can start small. So that the study which you put out and the eventual point at which you make a decision, it's going to be based on X size. It's not going to be what was before, and you'll take it from there.
Exactly. It's kind of like a staged one approach, in a sense, to show them, like, the mill is 800 tons a day, right?
Yeah.
So that's the Pure Gold, we're going very quickly to 1,000 tons a day and 1,500 tons a day, and they were going very quickly into the 8 zone. That's not practical, really, It's not practical. So we're going to look 800 tons a day, boom, that's it. I'm not going to talk about upsides and grade. That's part of it, to show that we can, because that ore body can do about that. That's what it can do. It can get there, we can get that. It'll be, and also because we're defining that much tighter spacing, it won't be a 20-year mine life. You know what I mean? It'll be a subset of that. We know it's there. We know there's opportunity, but we want to define very clear, very conservative. I think the market will go, is this it? You know what I mean?
Well, that's what I'm saying. But, I would, you're doing what you're doing, and we've just seen it time and time again where market expectation versus what the company's been signaling for a year or two, very different things, and then there's this massive drop off. We saw it recently with I think Amex on the exploration front. They're signaling it for a while, but the market wasn't listening.
And as you know, managing expectations is very part of this game. This game we're in, and I want to kind of follow on to what we've been doing. Very conservative, very that. I want to be able to show that, look, we have a project. It's not a $1 billion NPV sort of thing. It's a good start that we can deliver on. We will worry about upside later on. We'll worry about the big vision. We'll worry about the 8 zone. We'll worry about all that. We've got to get this right. Yeah. It's still an economic project. It's still robust. I mean, I've seen some numbers, but it's not shooting for the sky, because I don't think we'll get that credibility.
Let me be clear. It's not shooting for the sky day one, but in terms of what you see in front of you and what you're imagining in front of you, is there a process that you're going to go through to expand the potential?
There is, but I'm not going to show that in the study.
No, I'm not saying that.
No, I don't want to show, a 10-year mine life. We're going to 1,500 tons a day. We're making 700.
I get you. I hear you. And we'll, I agree. I know what you're going to make, and that's the market. Yeah. The growth bit is there. There is an ore body there which can give more.
There is.
And you've just got to work out the right way to do that.
And it's a bit like the process we've been doing for the last 12 months on that first portion. We've got to go in and understand how much is there, how big it is, how great it is, before we start to plan what the next stage looks like. And it's kind of like we've been doing this 2-year process now. We'll get a plan in place, and we'll spend the next 2 years getting the next plan and stage in parallel. So
but there is a growth plan.
There is a growth plan.
There we go. Okay.
At a high level, there's a growth plan to get this all the way to where Pure Gold wanted.
And you're getting into the weeds and the detail of how that happens.
Exactly.
Okay.
Rather than coming back and saying, hey, this is what we're doing.
Okay.
I'd rather show the market and get that credibility that, okay, this is it, but there is a growth plan, and here it is.
Yeah. Okay. So you're under no financial pressure to rush. So that's the good news. It's a high grade, near term producer.
Yeah.
That's the good news,
That's
the really
good news.
good news,
Good
quite
news, yeah.
frankly. And then there's a growth, blue sky component to this going forward. I think that's all I need to know.
Well, the ore body, look, this ore body is a great ore body. You know, lots of big majors looked at this. Prior to people going, Paso Dome had a joint venture. You know, the big guys, Evolution looked at it, Goldcorp looked at it. They were all interested in the long-term potential of it. So we know that's there. So we don't need to build that big story. I know it's there. Our geologists know it's there. Our team knows it. So it will come. If we don't deliver the first part, it'll never come. You know what I mean? So it's that conservative. Let's get it right. Let's do this. There's growth there. We know it's there. We can paint a picture of what that looks like.
Yeah.
But if we can't deliver on that, there's no point talking.
And I think in the context of what's going on this year, there's been a lot of things fall over because people are rushing to the end point, rushing to the win, which has been, well, clearly and demonstrated time and time again, maybe a bit more time is better, okay?
Yeah.
So that I appreciate what you're doing. I like what you're doing.
Excellent.
I really appreciate making time for us. I know you're busy as heck out there.
Yeah.
People are a little bit excited.
They are good. The market seems to be turning, you know.
2,500 gold.
Yeah.
Long may last.
It's funny, the gold miners look like geniuses. It's only taken us 11 years to get here, you know.